Hey traders, I hope you all doing well and I hope you all having a nice weekend. So I want to make a quick video on natural gas and gold today. I just want to give you a heads up for Monday, and I'm going to talk about technical factors and I want to talk about fundamental factors as well, looking at the Russian and Ukraine war situation and the growing tensions between Russia and Ukraine. And I'm also keeping that in mind, as if you guys don't know, I'm a forex trader and I'm a technical trader. I mostly do my analysis technically. I have done all my backtesting based on my technical rules, mainly on forex pairs, mainly on forex market. But when it comes to commodity market, we need to look at fundamental factors as well, because these commodity market affects a lot when it comes to this sort of situation, especially like a war situation. So in this case, I'm going to talk about both factors. So let's talk technically first. I'm going to talk about fundamentals as well. So let's start with Awanda, and I'm going to go through capital.com as well. I'm going to point out both zones for you guys. So let's start our analysis with gas, and we're going to go through gold uh, momentarily. So what do we have here? The market is now broken above this level of resistance, but after that we did not get any sort of bullish pressure, and as you can see, the market came back down and closed here, and as you can see, we got a similar sort of move here. Market moved up and closed back down. The first thing I'm going to do, as we have a break above our resistance, and this is the minor resistance, this is not a major resistance. The major resistance is right up here. So with that being said, I'm going to plot my Fibonacci tool to check the zones. And again, guys, do not just place this Fibonacci tool anywhere in the market. I have reason to place this Fibonacci tool. I have some more rules. I check some more confluences, which I can't explain in my single analysis. For that, yes, I have my course coming up very soon. So in that, I'm going to tell you every single rule to use this tool correctly. So in that case, I'm going to plot this Fibonacci tool here. And if you have been following me from last couple of weeks or months, then you might know how I take the entries, and you might know how you use this Fibonacci tool. There are two ways we can use the Fibonacci retracement. One way is that I wait for a 50% retracement. In this case, the market moved up and we had a 50% retracement already. Almost got a 50% retracement, but there are two ways of entering the trade using Fibonacci retracement. The one way is once we have a hit of 50% retracement, and let me mark my buffer zone here. So this is my buffer zone. I use both ways. Sometimes, it depends on the market. It depends how fast the market is moving. So I see so many other factors how I take the trade. So the one way is taking the trade is once we have a hit of 50%, I set up my buy limit order, and once we have a hit, my order is executed and we can take long trade, and the target I can see is around 5.249. But in this case, as we are on the resistance zone, I would not set up my buy order. I would look for a less aggressive entry, means that I will look for a bullish pressure here in this zone. Let's say if we get a bullish pressure here in this zone, like an engulfer, or I will look for a pin bar or 382 candle here in this zone. So if I get this sort of action between this zone, which is 4.923, and it goes up to 4.984. If I get the sort of bullish pressure between this zone, then I will go for long entries. And as you know, the war situation is pushing all the commodity market upwards. Keeping that in mind, if we get a bullish pressure here, then I expect the market to move up. So keeping both factors in mind, keeping a technical factor as my bullish pressure and the war situation going, as you know, all the commodities are getting expensive. So keeping both things in mind, if I get a bullish pressure here, and if we have more growing tensions between Russia and Ukraine, then yes, we can expect a market to move further up. That was a technical and fundamental analysis for buy trades. So let me give you a selling condition as well, so that you guys have both condition and you guys know how to enter the trade if we get a selling condition. So let's talk about sell trades. So we can see a bearish pressure right here. The candle came down and closed here, and let me show you something as well. We are getting a divergence. If you look at here, the market is making higher highs, and you can see the RSI is making lower highs, and we have this divergence here. So looking at that, if we get a next candle, like if we get a next bearish candle, if you see something like this, we get it here, bearish pressure, then I expect a market to move down, and it will definitely hit 4.764, which is our 50 EMS support. It can hit that. And let me show you something here as well. if you remember here, when the price was here, we are getting the higher highs and the RSI was making lower highs. And we got a divergence here as well. And after this divergence, you can see the market push down from the zone. So keeping that in mind, if we get a bearish condition, we are getting a divergence here in on RSI. If we get a bearish pressure, then we will expect a move down. So you got both conditions now. You know when to enter a buy trade with a bullish pressure, and you know when to enter a sell trade with a bearish pressure, as we are between our buying and selling zone. So we will look for entry condition. I won't enter without any sort of entry condition. I always look for different factors. Once I have a tick off my checklist, I enter the trade. So let's quickly check on capital.com as well. So here on capital.com, you can see I've already marked my Fibonacci tool here, and we have a 50% retracement already. Market has already touched our zone, and if you mark this buffer zone right here, it is 4.861 and it goes up to 4.918. So we already got the touch of this zone, and in this case, similar as we did on Awanda, if we get any sort of bullish pressure, like we get a next bigger candle, then combining our technical factor and combining the fundamental factors, like if you get any growing tension between Russia and Ukraine, so combining both, if we get a bullish pressure here as well, then we can go for long trades and it can go up to 5.160. Or if we get a pin bar or a 382 candle, so in that case I will look for buy trades. So let's talk about taking sell trades. So same condition we get here as well. We are getting higher highs, and you can see we are getting lower highs, and we got this RSI divergence here. So if we get a next bigger candle, let's say we get a bigger candle here, and then we can expect some move down. Depends on what condition we get. So similar here, if you see, we got this higher highs and we got this lower highs, and we get this RSI divergence overbought situation right here, and with divergence, and with that we got this bearish candle. Combining all the factors, it is telling us that I am going to move down, and it is giving us a complete selling signal and market move down. So that was a detailed analysis on natural gas, and I hope you have learned something out of this as well. This is how I do my analysis. Like I said, this is weekend, that's why I got time to upload a video. That is what I'm putting in my course as well, so you guys can able to learn more technical factors so that you can able to make your trading more efficient. So that is it for natural gas. Keep both entries in mind. So let's quickly check gold. Okay, so now what do we have here? The market is now, the price is now at the major level of resistance. This is the major level of resistance, and you can see the market moved down from this zone previously. And if you want to look back daily time frame, and if you want to look left here, you can see this level has acted as a strong resistance here in the past. And looking at that, this is a very, very strong level. Market rejected this level previously 3 4 times. So looking at that technically, if we have a break of this level, we get a next candle moved up, and we get a second candle move down, and we get something like a bearish engulfing candle, then it's a very strong sign that the market can push down from this zone, as this is the major level of resistance. But looking at fundamentals, looking at the war situation, if we have a break of this pink zone, which is 1971, if you have a break of that, don't go straight in a buy trade. Look for a further bearish confirmation, like if you have a break, look for another bullish candle, or look for a retest and a bullish candle engulfer or a bullish pressure. If we get that, then we can expect a market to move further, and the next level up is on top of it, which is 1994. It can hit 1994, it can go up to 2000. So if we have more bearish pressure, we have more bullish pressure, then yes, I expect market to hit this zone if we have a growing tension between Russia and Ukraine. But technically, if we get a bearish candle here, then we can expect a move down. So that's all for now, guys. If you have any questions, you can leave me a message on Instagram. And if you want to learn how to mark these zones, and if you want to learn more about trading, and if you want to receive an entry pattern, how I take trades myself, you can join one of my partner brokers. Links are in the description. Once you join it, I will send you weekly Forex report where you will learn all the entry patterns. So, any question, buzz me on Instagram. I hope you have a nice weekend. See you guys in the next video. Take care.